And then the firm Umbaugh has been around for 65 years, and we are the largest in the state that serves exclusively local government clients. So anything from counties down to special districts to schools, libraries, everything in between.
Did you have to wait that 2-year cooling period we talked about earlier?
What's that?
Did you have to do that 2-year cooling off period?
No, I was working for the State Fair Commission, so it didn't have anything to do with what I do here. They're a quasi-agency, so they don't technically count against me. All right. So we'll dive right in here on the local option income taxes. This is obviously a tax levied against the adjusted gross income. It's another revenue source besides the normal property tax levies that we see. There are two different sorts of them. There's what's known as the legacy LOITs. These have been around for years and years. The first one is the county adjusted gross income tax, also known as CAGIT. The other is the county option income tax, also known as COIT. You can only have one of those two. And then the county economic development income tax, which is your edit or seed it, depending on how you put it in the books. But that one initially was intended mostly for capital outlays, but now has really gone to be for any legal purpose of the unit that receives it. With the CAGIT or the COIT or the CEDIT, I think that goes to most of the taxing units as far as the municipalities, townships, and I think the libraries even get it. And then now we have some newer LOITs that have been more recent, levy freeze, property tax relief, and public safety, which will be kind of more of our focus today. So as we move in here, so with the new LOITs, every county is authorized to impose additional rates of COIT or CAGIT for. So if you're a COIT county, you have COIT, levy growth replacement, COIT property tax relief, COIT public safety. If you're a CAGIT county, obviously CAGIT, all of those things. And the additional income tax rates would be imposed either by the county council, if you're in a CAGIT county, or the county income tax council in COIT counties. Or if you only have CEDIT and don't have CAGIT or COIT, which I think there are still 1 or 2 counties that don't have either, then it would be imposed by the county income tax council. So get into a little bit of detail on these newer LOITs. The levy freeze LOIT has a maximum rate of 1%. The actual rate is actually determined jointly between the DLGF and the Department of Revenue, because it is based on the amount of LOIT needed to make up new levy growth. So basically, you get a maximum levy that was set sometime back in the 70s and gets a % of growth every year, that the statewide growth quotient. So this, what the purpose is that, for instance, this year, for 2016, the growth quotient's 2.6%. So rather than getting the 2.6% from your property taxes, you're getting it from income taxes. So DLGF and the Department of Revenue figure out what rate do we need to charge to make up that dollar amount. So your property tax levies are frozen, but you still get the dollar increase every year. It just has to come from income taxes instead. If it is adopted, the controlled property tax levies of all political subdivisions are frozen at the current maximums, and the rate cannot be reduced or rescinded. The decision to fund levy growth with income tax is permanent. Now that's what the statute says, is that it's permanent. However, I have a couple of clients that are in counties that have subsequently thawed their levy freeze LOIT. That's what it's actually called on the 1782 notice. They've thawed it. So basically, they still get a dollar amount of the income taxes that covers the growth during the period that they had this instituted. But now their property taxes go up instead of the income tax rate going up. So that was the effect of thawing. But I don't know if they had to get a special dispensation to actually thaw that, because statutorily it's supposed to be a permanent change. The next one is the property tax relief LOIT. The maximum rate on that, again, is 1%. Tax relief may be done through uniform credits, residential homestead credits, qualified residential credits, or a combination of the above. It can be adopted by any county without adopting any of the other new LOITs. One of the main advantages of this type of LOIT is you can use it for directed property tax relief. So what you would do is, if you look at what is causing your circuit breaker credits, so if your residential properties are generating the largest portion of your circuit breaker credits, what you want to do is utilize the property tax relief LOIT to give those people tax credits on their property tax bills. Brings down their bills, brings down your circuit breaker impacts. So that's one of the benefits to that particular LOIT, is you can direct it at specific types of property, or you can just do it across the board. A little bit behind. Okay, so then finally the public safety LOIT. The maximum rate is 0.25%. And as of July 1st of this year, you no longer have to adopt levy freeze or property tax relief LOIT in order to adopt the public safety LOIT. In the past, you had to have one or the other before you could get this one. The public safety LOIT has some special circumstances with it as well. As part of the new legislation this year, the county could opt to direct 100% of its public safety LOIT to the public safety answering points, which are your 911 centers. I don't know if you're all aware of the legislation that came out where every county had to consolidate down to no more than 2 PSAPs or 911 centers for dispatch. And this allows, because of that consolidation, a lot of places were running into funding dilemmas, because whoever was operating the PSAP would have to figure out how to fund the thing. And usually that meant either the participating units had to agree to contribute, or if you couldn't get agreement that way, then you had to look for another source, because the E911 fees were generally not enough to cover the cost. So this gives the county the option to adopt the public safety LOIT and direct the entire 100% of it to the PSAP, rather than being spread out across the municipalities. And this is one of those where it only goes to the county and the municipal units. So that'd be counties, cities, and towns would get that. The townships, libraries, all that, they don't get any of the public safety. So there are some restrictions related to public safety LOIT. Some of the eligible expenses are police and law enforcement systems. So any of your police or law enforcement costs, as far as salaries, wages, supplies, any of that. Firefighting and fire prevention, ambulance services, emergency action for environmental cleanup falls under this. Probation programs, community corrections programs, juvenile detention centers. So any of the operating costs of those can be used, or you could use it for the capital costs. County jail, the communication system, that's the 911, medical and healthcare expenses for inmates, and then pension payments for police officers, firefighters, sheriffs, and other public safety employees. That one is probably going to be a big one. I've noticed doing budgets and doing financial planning throughout the state that pension costs are definitely going up. And so I can see a lot of counties that may not have this could find a benefit in adopting this to fund just the pensions. Let's get caught up there. Okay. So the revenues are distributed to the county and to the cities and towns in the county in accordance with the distribution formula for CAGIT and COIT certified shares. So the CAGIT and COIT certified shares, basically they take, here's everything we've collected. They look at your levies as a percentage of the total levies in the county, and you get that percent of whatever was collected. So for the public safety LOIT, they would look at the levies for the county and all the municipal units, total of that, whatever your percentage is of that total, you get that much of whatever's collected for the 0.25% public safety LOIT. The revenues cannot be used to reduce the county or municipality's property tax levy for the year. And this one is allowed to be rescinded. So if there were to be a reason that you wanted to take it away, that one is allowed to be taken away. There's some restrictions on when LOITs can be adopted. It has to be done before November 1st in any year. If the ordinance is adopted before August 31st, it goes into effect beginning October 1st of that year. If it doesn't get adopted until between September and October, then it would go into effect at the beginning of the next year. However, the distributions, regardless of when you adopt it, wouldn't begin until the beginning of the next year. So if you were one of those that adopted between September and October, your first distribution will probably be zero because nothing will be collected. So selecting a LOIT, you got to look at what is the purpose of adopting. You want to provide credits for taxpayers, we talked about with the property tax relief. Reducing circuit breaker tax credits. I'm sure everybody here, when it comes to budget time, which is kicking off right now, sees that circuit breaker credits are impacting them and not in a good way. Decreases the reliance on property taxes. You know, we were just talking before we kicked this one off about the box store assessments. You know, that's going to affect property taxes. It's going to affect assessed values. TIF districts are going to be really affected by that. So I think you'll see more counties are going to be looking at the LOITs to try and make up some of these shortfalls that are coming down the pike due to this, and to generate new money for public safety expenses. My experience has been in most municipalities, particularly, public safety is probably around 60 to 70% of their total expenditures from their general fund. So really being able to generate new money for that frees up dollars for other services that you need to offer. So then you look at what rate should the LOIT be adopted at. Like we said with the levy freeze, that one's predetermined between DLGF and Department of Revenue based on what's collected and what you need to make up that growth factor. The property tax relief LOIT, you'd have to consider the purpose. If you want to drive down your circuit breaker credits, you may adopt a higher LOIT in order to do that, so that you can reduce those property tax bills. If you want to offer tax credits to taxpayers, say you're in a county where maybe a lot of people come in to work, but they don't necessarily live in the county, and you want to utilize this to offset some of the property taxes of the people who live in the county, you could do that by giving taxpayer credits to the people that live there, but collecting, you know, from the income taxes. And then public safety LOITs, you want to consider what do you actually need for operating your public safety apparatus, and also the other units that would be a part of this, the municipalities. You'd want to look at what are their needs as well to determine what can we generate, and you know, do we need to get the max rate, or can we go a little lower? LOITs are not one size fits all. You really do have to review the individual circumstances to determine what works best for your county. Okay, so I'll open up to any questions anybody has regarding income taxes, or local option income taxes, not all income taxes.
One on page 2,
Sir.
on the new LOIT.
Uh-huh.
It's number 3 at the top. Our county has that County Income Tax Council to establish the COA rates. Is
Right.
that, do you know whether or not that's set up by population, assessed value, or how that?
As far as determining,
Percentage of each community gets?
oh yeah, it is based on, I believe, the levies. So it would be, you know, if the county has 50% of the tax levies in the total county, then the county, you know, or the units, depending on who's got the most, would contribute in that percentage. So you may see a case where if one of the municipalities were to annex a large portion and get a large levy increase, you may see that case where they might take a bigger portion of the county or the tax council. So,
So how does TIF roll into that? All these big cities are doing the TIFs. When you say,
Well, I think it's the same methodology that the CAGIT certified shares and COIT certified shares are based on. So it's just your regular levies, your controlled levies. So the TIF levies are outside of those normal levies.
I'm just curious the complex process when you try to figure out the percentage to get that increased or changed.
You've got a lot more people throwing in input on something like that, I think.
Who actually determines the percentage of each community? Because Anderson's a big city, and they probably have close to 40 or 40% of that.
Of the council.
So the other two big cities, one of them join in, they usually have over 50%.
Right.
The county has a percentage, but that's got to change. And the question was, assessed value, population, you're saying tax levy, what's the tax levy?
I think it may have to do with the controlled property tax levies, if I'm not mistaken. It's either that or NAV, or assessed value, I'm sorry, but I believe that it's the levies, and so it would be, they look at, same as what they do with your CAGIT or COIT shares, where they look at you in comparison to everybody else in the county, and if you are 40% of the total levies for the county, total controlled tax levies for the county, then you would have 40% of the vote, or 40% of the power on that council.
With the farm values going up, then the counties might look a little possible.
No, well, because your levies are based on just the growth factor you get. So everybody's getting the same growth factor. So really, the thing that would mostly change that would be annexations, I believe. You may see some increases depending on if you have like cumulative funds and you max those back out, like a cumulative capital development fund. If you're not at the maximum rate, you can raise your tax levy by reestablishing to the max rate. So that might get you a little bit more, but it won't be a lot.
Is the state the one that determines that percentage?
I don't think this, yeah, I don't know that the state actually is involved in it. I have a feeling it's done at the county level just to determine, I mean, your levies are locked in, you know, the numbers are there. So I think it's just determined at that level, at the county level of, okay, here's what we each get because that's how much we have. So.
The percentage you get back, maybe, because it's complicated for me, and I'm just curious how they update it and how often they update it. Who in the county updates that percentage?
I'm not sure who'd be in charge of that. I would suspect it would probably be determined, I'm guessing at the auditor's level, but I'm not for sure.
We have to go to the state legislature to get it, the distribution agreed upon, you know, the city of Anderson, which is kind of crazy. The county option income tax is.
I'm not for certain about that. So I know one of our partners actually works a lot with LOIT. So if I can get your email, I will I'll ask him and see if he can give me the breakdown of where they come from. Yeah, yeah, he may be able to give me a better idea of how that operates, and maybe I can give you a better answer that's more helpful. Anybody else? I think everybody's ready to go. It's Friday afternoon, and. The council. Right.
And I think with COIT, some folks say, no, I don't have a COIT board, that they don't have a large, for rural counties, they don't have a large city.
Right.
It defaults in a sense.
Well, if the county has over 50%, then there's really no need to have a council, because the county can win every vote. So, I mean, they really have the lock on. Yeah, it would end up defaulting back to the council's decisions because they would, yeah, I mean, the county would have the lock on the voting. They would never be able to be beaten by a plurality, so, yeah.
I think that's pretty common statewide, is the county controls over 50%
Yeah, pretty much in a lot of places that don't have a large city or town, there's nobody else. It's like, you know,
But we
the
had to
county's
in our
most of
county,
it.
when we really got it established, we were gonna build I think a convention bureau downtown Anderson.
Mhm.
The city got so much, county was designated, and then they went to build a juvenile facility. And then when it got paid off, then there was some negotiations between the city of Anderson and the board.
Mhm.
And then supposedly, there was a mutual agreement to distribute it differently. And then down at the State House, they got the legislators from our community
Mhm.
on either sides of the fence, and it made the paper, you know. Thought they had it agreed on.
Well, and now, in that case, it sounds like they were trying to change the distribution based on the percent of levy, which statutorily, that's how it's supposed to be distributed. The council would be determining what rate are we charging, you know, whether it's 1% or whether it's 0.5% or whatever, but they don't get to set how it gets distributed. Statutorily, it's locked in how we distribute it out. So that may be why they had to go to the State House.
I think there's been a misunderstanding when you made the statement about the council sets the percentage. I think
Yeah,
it's
well,
that tax council.
Yeah, the
sets
COIT,
percentage.
yeah, the COIT board,
And
I'm sorry,
I
yeah.
question how they get the percentages and how they update the percentage.
Oh, as far as setting the percent for the tax rate? Because,
The county option income tax rate, if they go to try to raise it or,
right, if the COIT board wants to increase it, I mean, all of the members of the COIT board would have the vote, but it's based obviously on their percentage that they get of that vote. So like you said,
field tax operated also on the COIT tax council. I don't know.
now I'm not sure with wheel tax. I haven't worked with that one on how that's put in a COIT county. The only ones I've done anything with were in Cadgett County, so the county council was responsible for that determination.
We had that hot issue because it is my understanding it was the tax council, the county, with COIT, when they had it, then they did away with it, and then they added it back to wheel tax, so it was pitting town against county and town against town.
Gotcha. Yeah. Yeah. So it sounds to me, though, that they were trying to change the distribution methodology, which is actually set in statute, which then they would have to get the State House to vote and say, yeah, you're allowed to do this. We'll make a special exception, or no, you can't. Yeah. Yeah. But I think that as far as setting that percentage for the income tax rate, you know, that would be determined by that COIT board. And they may, you know, if you get Anderson and the county to agree on what we want that to be, you're pretty much locked in to win the vote over anybody else's complaints. But yeah, I think that if they were trying to change how they distribute it, then that would have to go to the State House, because the statute says this is how it must be distributed. So if you want to get an exemption, you got to get them to do something special for you. Yeah.
I know our counties use you guys a lot for advice, and we've been very pleased with
Oh, wonderful, wonderful.
what we received from your company.
Oh, that's great. Good to know.
I'm not giving you free advertisement, I'm just telling you facts are facts.
Yeah, I know. I heard St. Joe County up here, and I did something for them just recently, and worked on the PSAP for them, worked on circuit breaker analysis, so I spent quite a bit of time.
So you've been working on time.
Oh, did you? Yeah, that was a long process. Alrighty. Anybody else? Anybody else? No? Okay. Well, thank you for having me, everybody. My contact info is there. If anybody has any questions later, feel free.